sure route to tenure. So what you get in me is a subset of a subset of a subset, an investor who is a value investor who teaches value investing. Expect twists. I am not starting a fund. I state this because a common and valid reason for writing is to give potential investors insight into one's thinking. My motivation comes from a different place. I have seen enough people act against their economic interests that I want a book to throw at the next flare-up. Perhaps the page will triumph where the conversation did not. This book is about what I do. It's entirely my opinion, a distillation of what I see as the best practices in the discipline. It reflects my particular approach. Several parts of this approach are non-standard. For example, I hold stocks for the long term. I don't use leverage. I don't sell stocks short. And my portfolio is concentrated, never containing more than a dozen names, and usually far fewer. Other bona fide value investors act differently. They may churn their holdings monthly. They may borrow, short, or diversify. They would write different sorts of books. In the end, it doesn't really matter much what my peculiarities are. Value works. Once one has committed oneself to some incarnation of a value strategy, the long-term results are likely to be good. The impact of inflections is on the margin. Consider the way I calculate return on capital employed, a common metric that we'll cover. For the numerator, I use operating income, but many don't. They use net income, or earnings before interest and taxes. There's spirited debate on these different takes, but in context, it becomes banter among the knowing. It's like beachfront homeowners comparing views. All the views are good. One of the better lessons from my undergraduate economics classes was the difference between principals and agents. Principals hire agents to help them accomplish something. Agents are thought to possess special skills, connections, or other attributes that qualify them to assist. In finance, an example of a principal-agent pairing is a high-net-worth individual and a registered investment advisor. Other examples are a hedge fund limited partner and a general partner, or a retail investor and a mutual fund manager. This book is primarily for principals. It's firstly for people managing their own money. It will have little to say about how to satisfy regulators, communicate with outside investors, or other topics of interest only to agents. Of course, agents are also principals. They have their own portfolios and often take stakes in the pools of capital that they run. In addition, the best agents run clients' money as if it were their own. So this book is useful for agents too, but know that it is the principles that I put first. Most readers will enjoy diving into the processes outlined in this book, but some won't. They'll find them too demanding or tedious. That's not a bad finding. It helps some people see that they're unlikely to stick with the value approach over the long term. That's important, because the long term is what's required to achieve real outperformance. Those turned off should instead consider low-cost index funds. These are truly useful innovations that have performed satisfactorily. They've actually beaten the returns of many otherwise high-functioning people who venture into stock picking. Those who discover value investing tend to do so via one of two routes: trauma or exposure. Trauma, alas, is far more common. It's losing money or not making enough via some other strategy. Growth, momentum, and other approaches beckon and betray. Eventually, their sadism motivates investors to hunt for a better path, hopefully early enough in life to give value investing time to deliver. The other route is exposure. It's hearing about value investing somehow, somewhere, and in such a way that it is taken seriously. My route was the happy latter. The father of a childhood friend ran his own value stock fund. When this friend and I graduated from college in 1989, he went to work for the family firm, and I became a tiny client of its brokerage arm. He fed me recommendations consistent with the fund's principles. I was slow to pick up on the merits of his